Does this number here, do you think, did Chair Powell have it right based on what we saw today in these numbers with what he said?
This number should change absolutely nothing about what the Fed is doing. I think the Fed, to be clear, is doing the right thing. It's a little bit mixed. The payroll number is strong. I think the most important thing here is the average hourly earnings. That's a 4.5% annual rate. That's consistent with inflation in the mid-threes. That's a little bit hotter than we've seen lately. So maybe we're not seeing as much of a wage slowdown as we were expecting. But then you look over at the household survey, that shows 328,000 jobs lost. It's measured a different way. Maybe the difference is noise. People will probably figure it out over the course of the day. And we see the unemployment rate and labor force participation going up. So I don't see this report, see it maybe as mildly a tiny bit hotter than what we thought before, but well within the zone that the Fed needs to stay at it. But the Fed doesn't need to panic. I think 50 at the next meeting, based on what we're seeing so far, would be completely fine. But the Fed should be going slower for longer, getting to a higher terminal rate. Doesn't matter exactly how fast they get there.
Wow. Neela, do you agree with everything that Jason said, or do you expect data? Do you expect data eventually to get in the way of that higher terminal rate, or it's going to hold up like it did again today?
I expect the labor market to get in the way of that higher terminal rate.
Look,
ADP put out a number of 239,000 jobs, private sector, on Wednesday. BLS follows up on Friday with 233,000 private sector jobs. You're seeing a drop in the labor force participation rate. And then when we ask our small firm clients, what's the key challenge for you right now? It's finding qualified workers. We still have a labor market that is incredibly tight, with an unemployment rate below 4%. So for the Fed to cool off this economy, the biggest hurdle right now is the labor market. They may have to go around it. They may have to go to housing. They may have to go to financial conditions. I hate to say this on CNBC, but the labor market is showing some really solid gains for an economy that is this mature in its recovery. And I think that's good news for consumers in Main Street, that job losses are not looking on the horizon right now, at least not in this report.
Neela, do you think that the Fed is just going to keep the pressure on till it causes job losses? Does that sound like a good way to run an economy?
No. I don't think so. I think they're betting on job openings coming down. I think they're betting on some moderation in monthly hiring. I think they're betting that wages, which are, as Powell said in his press conference, sideways now in terms of growth, but at a higher level. I think they're betting that those wage growth comes down and decelerates over time with more people coming into the labor market. And I think that the Fed is going to moderate its policy hikes, but it still has to go all the way down the field. No matter how much they do in one play, they still have to get to the goalpost, and the goalpost through the labor market seems pretty long, pretty far away right now.
Liz, the market got to unch, and now it's back up 200. What is the market focusing on with this report?
Well, I think the stock market obviously likes this report and is focusing on the idea that the economy still seems strong. We're still able to add jobs in the face of what is otherwise slowing and tightening from the Fed. However, labor is one of the last things to crack. And I do expect that before the end of the year, we're going to start seeing cracks in the labor market. As we all know, we've started to get announcements of layoffs from the tech sector. Now, tech alone is not enough to get us to problematic levels of unemployment, but it can change sentiment. And as that continues, and if a few big companies jump onto that layoff bandwagon, I think we're going to see some of this sentiment, at least in the equity market, turn pretty quickly. But that might not happen until December when we get some more November data.
So, Michael, do you think the stock market wants the labor market to hold up or doesn't want the labor market to hold up at this point? 'Cause I'm surprised if it's holding up. I'm surprised that that doesn't mean the Fed's going further and the market sells off.
Yeah, I think the stock market wants interest rates to be lower than they think that they're going to be. And if this report were indicated that the Fed was likely to change course, I think we would see a different market reaction in a more hawkish direction. But this report won't affect the Fed's decision for the December meeting. I do think that this report suggests that the labor market is holding up. I think the labor market's going to hold up throughout the rest of the year. I don't see any indication that consumer demand is going to cool. We're coming into the holiday season. I think people are going to spend some of the excess savings that they've accumulated over the course of the pandemic. That's going to fuel additional labor demand. We're going to have a few more months of solid payroll gains, I think. And if you look at wage growth, you see that wage growth isn't getting better. Wage growth is not cooling off. And so, I think the Fed is looking at this. It shouldn't affect what they do for December, but it should affect, I think, their projections for the terminal rate. Markets are expecting the Fed to stop at 5. I think if the consumer holds up and that continues to support labor demand for the rest of 2022 through the holidays, then 5 is not going to cut it. The Fed's going to have to go higher than 5.